Hi there, thanks for coming back to my channel. My name's Pitt and I make videos about content marketing and business so that you can grow your business and increase your profits. I am continuing with my crypto series, and one of my viewers reminded me that I never ask people to comment. So please give me your comments when you've watched some of the video and you have an opinion. Let's exchange, let's interact via the comment section below. Today's title is how to avoid emotional investing. So keep watching and I'll give you my thoughts. So emotional investing, I should explain what that is. Emotional investing is when you make rash or short, ill thought out investment decisions based on how you're feeling at the moment. So let me illustrate that by, I'm on CoinMarketCap. I have to always say that it's owned by Binance, so it's not completely independent. But here, this is the more or less is regarded as one of the industry standards in terms of pricing levels for different cryptocurrencies. So I'm just scrolling now and you can see, and it's the 21st of January, and everybody will know who follows the markets, cryptocurrency markets, that there was recently an announcement by the Fed in the US. I'm not even a US citizen, so I'm not going to talk about that in any detail, but what I will say is it had in the short term, in immediate short term, it had a very negative impact on cryptocurrencies. And you can see that just on the 24-hour split, Bitcoin is down almost 11%, Ethereum's down 13.6%, Tether's even down, and let's scroll down a bit further. You can see that Cardano is down, Solana is down, across the board they're down, you can see. So if I was prone to emotional investing, I might think, oh, I've got money in these cryptocurrencies and I'm losing my money and I'm losing it at a decreasing rate. Should I take all my money out now and save, what I have left, so that it doesn't, so I don't lose any more money? That would be an emotional response to what's happening in the markets, and it's human nature. It's automatic to think, oh, actually, yeah, I'm losing money. Let me stop the losses. But in reality, you only realize those losses when you do sell and you do trade at those lower levels to perhaps what you invested at, or lower levels to perhaps what your predictions were. So it's very understandable. I just want to going to go to CoinGecko just to show that the prices are similar there and nothing has been doctored. So you can see here, yes, Bitcoin down 11%, Ethereum down 14.8%. So how do you avoid making sort of knee-jerk or emotional investment decisions? And the easiest way, and the one that most, I'm going to say progressive and thoughtful investors make, is by what's known as dollar cost averaging. What that means is, instead of investing, oh look, Bitcoin's low, let's put all our money into Bitcoin now, or Ethereum's low, let's put all our money into Ethereum or Solana, etc. Let's go now because the market looks like it's a great opportunity. Instead of doing that, you set up a recurring trade, whether that's on Binance or if you're still on Coinbase, something like that. There's just two of the exchanges that are available, and then you invest on a regular basis. So it might be $50 or £50 for those in the UK every week, or it might be every month if that's what you can afford. And so in doing so, you're whatever happens to the market, whether that's up or down, you're investing a regular amount every week, every month. What that means is you are prone to obviously market fluctuations, but your investment decision is based on your long-term view and your long-term belief in projects, whether that's the projects related to Ethereum and the many projects related to Ethereum or Bitcoin over the long term. So at the end of the year, that those incremental amounts of $50, £50, etc. Build up, and you have an increasing position in that particular cryptocurrency. So that's how you avoid emotional investing. It's really important that you master this, because, well, I'll say this from experience, I have invested in cryptocurrency markets since 2017, and I have made mistakes because I've seen the so-called hot coin, or a coin that was being promoted and was touted as something with a very bright future. I'm not going to name that coin now. Maybe I'll do that in another video. And I've invested in it, and I've invested it almost at its peak. And then more or less, as soon as my money's into it, the price has crashed. And I'm sure lots of investors have had this experience. And recently, quite interestingly, I looked at the price of this coin recently, and it's still not matched the price that it was when I invested in it. So I obviously lost money there. It wasn't too much of an amount, so that's fine. I've been able to move on from that. But this is the perils, this is the dangers of emotional investing. You know, a coin is being hyped, is being promoted, and I talked about that a bit in my last video. And because of that, you want to get in on the action. You know, you have this fear of missing out, and then you invest in the coin, the project, and it doesn't do very well. So avoid that by making sort of fundamental decisions in terms of your cryptocurrency investment strategy. This is not financial advice. As you know, I say that in all my videos. This is just for entertainment purposes. You must do your own due diligence, and you must then make your own investment decisions. And you're responsible for those. You've got to make fundamental decisions, and I suggest that those are based on your long-term view, not a very short-term view. And in that way, you should be able to eliminate the number of times you get burned by making quick knee-jerk investment decisions into cryptocurrency or into any other investments in different asset classes, and then losing out. So let's avoid those by doing what's known as dollar cost averaging, and it's something that you should apply to all your investment products. I'm just going to move myself here so that you can see. But yeah, just a few days ago I published a video about is it too late to invest in Bitcoin. If you haven't watched that, I'll put a screenshot from that. If you haven't watched that, you should watch that. But already there's been an opportunity since that video was published to invest at a low level. There were profits to be made, and then now the Bitcoin price has gone down again. So potentially that's an opportunity to buy the dips, as they say. When the market goes down, if you've got additional capital, you can put that in. But be very careful with that, because you don't know if it's reached the bottom of its down point, let's say, or whether it's going to go down further. And that's why dollar cost averaging is the best approach, because it makes a more rational and consistent approach to building up a position in cryptocurrencies. So as I said in my video about is it too late to invest in Bitcoin, it's not. There's still opportunities to be made, and there will still be new people becoming very wealthy because of cryptocurrency investments. Thanks for listening all the way through. If you've liked this video, please give me a like. I'm happy to read your comments. Please put your comments down below. I look forward to speaking to you in the next video. Click on one of the screenshots to watch another video from me. Until then, thanks. Bye-bye.